Are you self-employed? Have you been in business for at least 2 years? And have you applied for a mortgage with your local bank or credit union and been denied because you didn't show enough income on your tax returns? Does that sound familiar? If it does, you've come to the right place. The type of loan you're looking for is called a bank statement loan. Now, my office does a ton of these here in the state of Florida. This video is just one part of an entire educational workshop designed to quickly get you familiarized with bank statement loans. So be sure to subscribe to the channel and check those out. In this video, we'll cover one specific topic: how is income calculated on a bank statement loan? Let's get started. The bank statement loan was designed for business owners who have been in business for at least 24 months. Now, if you're an independent contractor or a 1099 wage-earning employee, then you may need a different kind of loan program similar to this one, but it's called a 1099 program, and I'll include a link in the description below if this applies to you. Here's how we calculate the income. Step 1, we'll be adding up all the ordinary business-related deposits. From that total, we're going to remove any non-business related deposits into the account, such as store returns, Amazon returns, Home Depot, Staples, etc. Anything that is not normal, ordinary business income. Next, we're going to divide that number by the number of bank statements. In this example, let's just say 24 months of statements, so we divide by 24. Now, this figure becomes what we call your gross income. Step 3, we'll apply your percentage of ownership in the business to this figure. Let's say you're 100% owner of the business, then we can use 100% of the income. If you're 50% owner of the business, we can use 50% of the income, and so on and so forth. Step 4 is we'll take that number and then apply a default expense ratio for the business of 50%. This now becomes the monthly income for your loan application. Step 5. What happens if your business's expense ratio is lower than 50%? This is actually quite common. If this is the case, then you can simply provide us a letter from a licensed tax preparer stating your business's true expense ratio. And then we apply this expense ratio to the gross income. So again, if the expense ratio is, say, 30%, then we can use 70% of the gross income we calculated earlier. If the expense ratio is 20%, then we can use 80% of the income, etc., etc. And then this becomes the qualifying income for your loan application. All right, so we've covered the concept. Now let's apply that to an example. Joe's Widget Shop. He's 100% owner, and he's provided us with 24 months of business bank statements. The total income over the 24-month period came up to be $525,000. Joe's, again, 100% owner of the business. So we took his gross income as $21,875. That was $525 divided by 24 months of statements. So his qualifying monthly income with the default expense ratio of 50% comes up to be $10,937.50. However, his actual expense ratio was actually 30%, not 50%. So he provided us a letter from his CPA, and we applied a 30% ratio, allowing us to use 70% of his gross deposit income. So the income we're using on his application turned out to be $15,312.50 per month. It's really that simple, and we find that it actually gives us a better idea of your business's true profitability versus using the tax return approach from a traditional home loan. And that's it. We hope you found this information helpful. And if you'd like more information about bank statement loans, consider subscribing to the channel and checking out our other videos about more detailed information about bank statement loans, our bank statement home loan resource page, which I'll include a link in the description below, and share this with your business owner friends. This can make a world of difference for them. And of course, if you're looking to purchase, refinance, or get pre-approved to purchase a home anywhere in the state of Florida, we would love to assist you. Thanks again for watching. I'm A Bissen, and this is Unconventional Lending.